Thank you, Alex. I think we have a very high quality of panelists here, speakers to share their experiences, covering everything from seed to early growth and beyond. So I think it's going to be a very interesting conversation. First of all, we would like to highlight a few facts on the countries I'm going to be talking about. If we look at the Spanish investment and M&A situation in terms of in the tech ecosystem, we're going to see that the value, the fundraising in terms of value has been dominated mainly by B2C. However, the number of deals has been increasing in B2B. And in fact, B2B is taking the lead and continues to gain momentum. In 2019, 60% of all rounds were in B2B. In terms of M&A, most of the acquisitions have been carried out by American firms. If we look at our neighbors in Portugal, we see a slightly different picture. Fundraising, in terms of value, has been dominated by B2B there instead, whereas in M&A, B2C still stands out. However, in M&A, we have to highlight that the market is still a little bit illiquid if we take out the deal with Farfetch, but based on the current evolution of the fundraising, we can imply that may actually change in the near future because the ecosystem seems to be gaining in maturity. Now, if we travel a little bit beyond into Italy, unlike Spain or Portugal, here most of the large fundraisings have not been completed by international VCs. They're not very present in the region, with some exceptions, like Broom Broom by Axel, Coreview by Insight, and Frida by Alban. In terms of M&A, also we can see that most of the M&A deals have been done on ventures that have not been VC backed. And most of the sales have been done to local companies. So it looks as if Italy is still not quite yet on the radar or on the core target list for international VCs.
Excellent. If we go across the ocean to Brazil, we will see that Brazil has really exploded over the last 2 years. But actually, maybe it's even sort of in the last year that has been to a large degree sort of caused by large investments by Softbank, by Naspers, by TCB, okay, that have been really taking the region by a storm, okay. And at the same time, in Brazil, we already have the first big M&A deal in the region, which was the acquisition of 99 by Didi. It was a 600 million acquisition, actually taking into account all the investments close to 1 billion. So we already have the first big M&A in the region there. With regards to Mexico, we can see the fundraising has not gone so extreme as actually has been in Brazil, but also we have had a fair amount of large fundraisings. So from Goldman with Confio, Clip with SoftBank, particularly the first two in fintech. There has also been significant amount in food tech and also quite a lot in mobility. Okay, and in Mexico, actually the first digital M&A was for a company invested by Seaya, and that was Sindel and Tal. It was in 2015, so actually outside our scope, but we think it was worthwhile to point it out. And then Linio, a company started by Rocket Internet, was sort of the latest M&A, but still very little M&A as well. And in other LATAM, okay, we have a humongous fundraising led by SoftBank with Rappi, okay, and then the rest of LATAM is relatively small. Okay, we believe that it's going to grow significantly. We have 2 investments by Seaya in Colombia, which Colombia is actually picking up quite a lot. And then we have also a few M&A, but they were more sort of from payment companies that were not really VC backed.
Thank you, Oriol. Before we jump into the questions, I will ask our guests to make a very quick intro on themselves, how you or your firm relates to the Southern European and Latin ecosystems in terms of investments or focus.
Thank you, and thank you for having me and for inviting us to the panel. My name is Beatriz González. I'm the founder of Seaya Ventures. We're a fund based out of Madrid, invested in Spain and also in Latin America. We do Series A and early B investments across all technology sectors. And we have two funds, Seaya 1 and Seaya 2, and we manage 160 million euros.
Thank you.
My name's Carolina. Thank you so much for having me. This topic's very close to my heart because I'm Brazilian myself. Though I'm based in London, I'm an investor for the Softbank Vision Fund, which is the $100 billion growth fund for technology companies. We invest globally. Most recently, our SoftBank Group, which is kind of our mother organization in a way, has launched the SoftBank Innovation Fund, which is the $5 billion fund that has been investing in lots of the Latin American companies, and sort of we co-invest with them in Rappi as an example. But yeah, very excited to have the discussion.
It's hard to talk numbers after SoftBank, right? So I'm Miguel Arias. I run WIDA globally. WIDA is the open innovation initiative by Telefónica to work with early stage entrepreneurs all across our footprint, which is mostly South America, Spain, Germany, and the UK. So to talk some numbers, at least we have a lot of startups right in the portfolio because we invest quite early. So we have invested in around 700 startups so far at WIDA. Of those, around 600 are or 550 are in LATAM. And right now we have around 400 which are active. And the key number I would like to talk to you about is that of those, 100 plus work with Telefónica with commercial contracts. Around 60 of them are from LATAM. So our key goal here is we don't put too much money, not as my colleagues. What we try to bring to the table is that we make joint business with the startups as a corporate.
And I think that our panelists have been very modest, but effectively we have the largest investor in Spain and in LATAM by quantity, okay? And we probably have the largest investor in amount in LATAM, okay? And we have a super successful Series A investor across the region, which to be a bit more specific.
Excellent. So thanks for that introduction. So let us jump in looking at the Southern European spectrum. I mean, mainly Spain, Portugal, and Italy. What is your take? What is your rating of those of the ecosystems in those countries in terms of maturity? How do you see the evolution in the last? How do you see it?
Okay, I start? Oh, okay.
Any of you?
Please, I let you start.
Yeah, so we've seen a huge change in the last 2-3 years, I would say.
Yeah.
Looking at Spain, Italy, and Portugal, certainly Spain is ahead of the other two countries. And in the last 2 years, we've seen companies being able to raise bigger rounds, which has changed the whole ecosystem. Because that's the problem that we were facing, right? 5-6 years ago, you couldn't raise money, so you had to sell, I wouldn't say cheap, I would say low, at least for a low number, and you couldn't really be very ambitious and continue expanding your company. So that's what the change that we've seen in the last couple of years. But looking at the rounds above 10 million, we're still 6 years behind France.
Okay.
So in 2012, the number of rounds above 10 million in France are the same as in Spain in 2018.
Okay.
So significant improvement, but still way behind the rest of the European countries.
Yeah, I would agree with that. I think that Spain is probably ahead of Portugal and Italy when you look at dollars invested, number of rounds. And when you think about the ecosystem maturity, especially at the early stage, it feels like there's more capital now in Spain. But still, if you're trying to raise a Series B or a Series C, you probably definitely have to work harder than someone who sits in London or sits in Berlin, much closer to capital. And I think from a talent perspective, all these countries have amazing business universities, engineering universities. But I think where, at least from my experience, and I've invested earlier stage at Atomico prior to SoftBank, and where there is a scarcity of talent is people who have done it before in terms of scaling a business. So it is right at that Series B stage. So it is finding, your chief sales officer, your chief revenue officer, people to expand your company. And so I think, those three hubs probably still lack that. And then I'd say the final thing is just success stories. And I think you have had that in Spain, which I think has moved the ecosystem forward with TicketBiz and some of the the exits here, and those guys either going and starting their own funds or being angels, but also people believing that this is possible and not going to the more traditional sectors, but actually going and starting companies as well.
Yeah, I'm piggybacking on that. I think the key change is that we now have second-time entrepreneurs, right?
Yes.
We didn't have that 5-6 years ago. Now we have very successful entrepreneurs who have the connections, maybe outside of Spain, but you can gather money from the UK, US, or Germany, and you can then create much more ambitious projects. But I think the key point for me, and you mentioned that very rightly, is what you find in New York, this cross-pollination in the ecosystem where the growth responsible for Facebook in North America then moves to somewhere else and
Yes.
brings all this knowledge, connection, everything else.
Yeah.
That in Spain we still don't have it so much, so we need to encourage authorities and anyone else so that we can attract this talent from outside Spain, or take back the Spaniards that went out and did so great things in the US or UK, so they can help us for this next stage, because we have the funding, we have the entrepreneurs. I think we lack this high level tier of successful business people.
Yes.
Excellent. So I call to all successful Spanish entrepreneurs, keep pushing the Spanish ecosystem. Maybe we can run those 6 years in 3. Right?
We will. Yeah.
Excellent. So then, just going back to sort of what Carolina was saying. I mean, apart from the numbers, there have been a few drivers, okay, with regards to this success. And you've mentioned one sort of, which is second-time entrepreneurs, talent. I mean, but maybe sort of for you. I mean, what has been the driver that you think that, particularly at LATAM, that you've seen this big surge in interest from outside? Has there been a catalyst? I mean, is there anything that you have seen in the ecosystem that has changed so much?
Well, we've been investing since 2013. Mostly, it's a small location, but still very focused in Mexico and Colombia. What we've seen is these local companies becoming regional leaders. Well, not leaders, but wanting to become regional leaders. That's why you invest in Rappi. That's why a Brazilian company goes into Mexico. So when you think beyond your country and you become regional and you have more ambition, I think that drives the whole ecosystem. And obviously the talent is better, and the capital, Softbank coming in March and investing big tickets in these companies is really changing the whole landscape. But I think the mentality and thinking about becoming a regional leader or even a global leader is really helping the ecosystem.
And when you compare that with Spain, do you have the same mentality about people wanting to be European leaders?
I think so, yeah. So you see the companies here, we have obviously a big stake in Cabify and Globo. We're the second shareholder in both, so we're very close. You see the founder of Cabify trying to become a regional leader. You see the founder of Globo, opening up Kazakhstan, Croatia, Costa de Marfil, Morocco, Latam, Ukraine.
That's
we're the
more
first
than regional leader.
Yeah.
That's like global leader.
global leader. So Globo is the first player in Ukraine. That's pretty amazing.
Excellent.
I think obviously Oscar just turned 26. He started the company when he was 23, and he thought big from day one, and he thought, I want to build a global company. He faced the challenge of fundraising, and all of the investors are international.
Yeah.
That's where we have the problem for the big rounds, right? But the mentality has changed, and it's working for him, so he'll be an example, like other entrepreneurs, for people that are starting their businesses.
I totally agree with that. If you looked at the number of $1 billion out of LATAM a couple years ago, the latest one would have been Mercado Libre,
Yes.
which IPO'd in 2003 or whatever it was. And so you went, over 10 years without a company getting to $1 billion, right? And then, PagSeguro IPO'd, and then you had other examples. And one of the companies that I've had the huge, the huge fortune for me to be involved with is Gympass, which was born in Brazil, and it's a marketplace that connects fitness providers to corporates and then users as a benefit to employees. And they started in Brazil, they went to Mexico, and then they came to Europe, and now they went to the US. And everyone in the ecosystem, and you see this in Brazil and São Paulo especially, starts to see, wow, this company's international. And then other companies pop up, and then the talent pool just becomes that much deeper.
Let me try to give you a different vision from the seed stage, because maybe we see like early trends, right? And I mean, a few years ago, and we have been investing in the region since 2011, right, with Wida. We saw lots of marketplaces, lots of copycats from other US projects, which is good. I mean, it's a great way to start, and you can grow it, less risk in a way. But what we start seeing now on the seed stage is more deep tech, more deeper engineering knowledge, and then creating businesses around that, right? If you see most of the big rounds, it's still too much, I mean, and it's not dismissive, but around gig economy, fintech, etc. I think there is an opportunity in the region about all these great talented engineers to build big, deep tech businesses.
Excellent. Just a quick show of hands. How many of you are entrepreneurs here?
Or want to be entrepreneurs after talking to us, right?
Or want to be entrepreneurs, that's right. Okay, and how many of you are investors? How many of you are corporates? How many of you did not know where to sit at 4 p.m. and you thought it was comfortable enough to be here? No? Okay, not many. Okay, excellent. So listen, let's continue with that. So with regards to fundraising for entrepreneurs, okay. First is, let's go towards the valuation side. Do you see that there's a bit of a divide between sort of Southern Europe and Northern Europe, between LATAM and Europe in terms of different mentality with regards to valuation? Is that something that it bothers you for your companies? Okay, or is it something that you've seen improving over the years? Okay, so what's your stand? This is a sort of a recommendation and some insights into that for the entrepreneurs in terms of valuation. How do you see that?
Can I add something? I think there are some people that are creating inflation in the market. Just kidding. It's great to see all this money coming in, right? That's going to help for the next rounds and everything else. But I mean, there is indeed valuation are increasing rapidly, right? Pre-money valuation in LATAM. I mean, it was usual to see pre-money valuation on initial market fit for a startup at 1 million pre-money.
Yes.
I have not seen a 1 million pre-money deal in the last year, right?
Really?
So you see, I mean, this is, you can now even see 10 million in a conversation, which was things you only saw in New York, UK, or Silicon Valley before, right? And now they talk to you, yeah, because I'm going to be the regional leader, I can do that. And that was so it needs to be proven, right? But you see a tremendous increase in pre-money valuation at seed stage, and I would love to hear what happens later. The question for me is, does it matter so much? Probably not so much for us, right? Because if they really become the regional global leaders, then our multiple is going to be awesome no matter what, right? So we are a bit insensitive in pricing if the business makes sense.
What are you seeing at the Series A and confess? Tell us. What's going on?
Carolina. So Series A, we're not seeing valuations increasing a lot in Spain. In LATAM, we have seen a huge increase in the last 6 months.
Yeah.
But in Spain, the Series A was around, I would say, 4 or 5 million in 2013, got to around 8 million in 2016. Now it's probably 12, 15. It's not such a big deal for us. We do have a small percentage, obviously, and then if the company raises a lot of money, we get very diluted. But I think it's not that significant for us. We've never made we've had some write-offs, obviously, and it's never been connected to the valuation. It's always the team and the trend. If you get the team wrong, and if you get the trend wrong, there's no going back. It's not like in operational businesses where you can turn things around and open up a city or close it or change your business model. In venture, in investing, that round is gone. You lost that company, and if you invest and you don't get that right, you have to embrace your failure and just move on. And it's never been connected to valuation for us up until today. And the transactions we've done in Spain in the last 6 months, I don't think they're expensive. I think that the companies are better, the founders are better, the market is better, so companies should be, I wouldn't say more expensive, the valuation should be higher to reflect that. No?
So you see value and valuation increasing at a reasonable pace?
In Spain.
In Spain.
In LATAM, it's another story.
Really?
Yeah, so I can't speak for LATAM because I'm not in the LATAM fund. But I think in Europe, what you do see in the data, and I think this is Europe as a whole, is that rounds are getting bigger, which means the valuations are getting more expensive, or maybe they're fairly priced, but relative to what they were before. And I think that is in some instances potentially problematic. Although I actually really agree that if something's going to be an outlier, it's probably okay. I think the positive of that, and which is very much at the core of what Softbank believes is that entrepreneurs are also getting more ambitious, right? So they will take more capital, they'll take a little bit more dilution to then build something a little bit bigger. And hopefully what that means in geographies that are a little bit further from where the capital is that founders won't sell so early because they know that there's this capital out there. And I think, my personal view is that that's the real question for LATAM.
Yeah, that's true.
Who of you here, the entrepreneurs, is fundraising right now? Okay, not many. And who of you have already fundraised and gotten some money already? Okay, that's good. So you're taking a breather right now. Okay, great. So in terms of fundraising, what I wanted to ask you next is across the region. So what would be, in terms of recommendations for entrepreneurs when they approach you? And I know that you're at Seed, so probably sort of you will have a set of relatively different set of recommendations, but I think that for them it's very important to understand how they should better approach you, so that not only they increase the chances to get fundraised, but they also increase the chances of being sort of more, personable and communicate better their vision. How any advice for them?
Yeah. So I think my biggest piece of advice would be to listen. So entrepreneurs come and they do the pitch. They never ask. They never ask, who are you? What do you like? What do you have? It's like the basic.
How is your day? How is your day?
Yeah, how was your day? That would be nice. But when you pitch to an investor, you have to understand what's the criteria that investor is following. And you have to understand the timing of the fund, and you have to understand if things have gone wrong or not. And I think entrepreneurs just tend to go out there without any structure. They just visit funds randomly without any structure, and you have to prepare the process, understand who you're talking to, and then also decide who you want as a partner. And in terms of style, it's very different to pitch to a Spanish investor than a US investor. So Spanish investors are very focused on metrics. So you have to get your numbers and focus on the KPIs. US investors are very focused on the vision.
Yeah.
So depending on the nationality, I think it's different. For Seaya, we're a bit different in that sense. My personal approach is very different. So obviously we'll look at the metrics, but I want to see the vision. I want to understand the team. I want to use the product. I want to use the service. I think we have a different approach in that sense from the traditional Spanish investor. So I would encourage a more American approach to an entrepreneur that's coming to pitch to us.
So show big vision.
Well, and give me a sense of the product. As soon as we look at a company, next day I'm using the product. In Globo, I've been a Glover for the whole day with my whole team. I got on the bike and I did Globos. That's how you get to know a business, right? Yeah, I did it for 5 hours, and actually, gave the money back to Globo. It's a charity thing. Yeah, you discover very weird things when you become a Glover. Anyway, but that's our approach. So I need to really feel what's behind. I need to know the story, the background. I think that's more American, probably.
Yes.
Okay. I would say, but listen and structure and adjust your approach.
I would say that there's been such an abundance in capital in the past few years that it's become easier for people to raise, and I think for that maybe you become a little bit more complacent because you think that you'll find capital and there's easier access to capital. And I think two big things have happened. One is founders want to spend less time fundraising, which makes sense because what you love doing is spending time on the business. But I think as a result, you understand investors less, and so you spend less time with investors. What do they really stand for? What's the strategy? What's the mission? Who are the people? What's the platform? And so I'd say check in often with certain investors and build those relationships, because that can be very telling over time. And then the second thing I'd say is really try to drive your business to be sustainable as fast as you can. Obviously try to be ambitious and grow it, but flex the model so that you know that you can, because the more that you rely on capital markets, the more that you're exposing your business to existential risk, to the whims of the markets. And right now it's fine, but it's a lot of risk that you as a founder put on your business.
Let me just add a bit of controversy here, because obviously, if I'm going towards kind of sort of good metrics, breaking even, and so forth, I will not need 100 million. So where
No,
are you
but
going
I'll
to
give you an
invest?
example.
Yeah, if you can develop it
I'll
more,
give you an
because
example.
some
Of
people
course.
some people come to me and say, no, in a year or two, I will be breaking even. And you say, no, that's not possible if you really want to grow fast, no? So how would you approach that conversation with an entrepreneur that tells you, I think I don't need more money, but you have a phenomenal business? How, in your case, that obviously you want to write big checks in the big companies. No?
Yeah, but I think growth capital is all about you have a playbook that works in one of your most mature markets. So use like Glovo and food delivery. In their most mature markets, they know that the unit economics work and they continue to improve. And then the growth capital goes into replicating this into multiple markets so that they continue to gain share and be big. But they've tested the model and they know that they can get to that if they need to. And so I think that's, I think sometimes capital is so easy that you don't even test, you just grow.
Okay, so then effectively, you wanna sort of have those stable, proven economics within your home market or within your region, and then you say, hey, now I want to replicate that. Now I need a very big check in order to do that at scale. Somehow that would be sort of the thing, no?
And I would add, I think that you can reconcile both things. So we look at healthy growth. So if you look at a business like let's say a marketplace, if you have recurrent orders above new orders from new users, that model is working. So maybe you can just expand into other countries and then spend a lot of money, but you need that healthy growth. It's the same in a SaaS business. You can have 3 clients, but they have to be 3 very happy clients, right? So that's healthy growth. And from there you grow and you expand and you can burn more money. But you need the healthy growth and you need the recurrence. If it's B2C, if it's B2B, that's what we focus on. So we do focus on those metrics. If you're just giving promotions or you're selling to clients but not even getting them to pay you, you have a problem. If you have big churn, you have a problem. So those things are the things we look at, even if we do smaller tickets, obviously.
How about earlier stage companies that are precisely asking for that sort of first couple of million in order to go abroad? Because in some cases you see this sort of chicken and egg type of situation where I need the money to go abroad, but I'm asked to have some proof that it will work abroad before I get the money. So how would you recommend entrepreneurs to solve that?
Sure, you need to take a bigger leap of faith, right? And you're taking more risks. So the team is even much more important because you need to invest in people who are able to change and pivot. What you know when you invest in seed is that what you're doing today is not what you're going to be doing in 12 or 18 months. So the key point for me is to see if they have a plan for these 12 and 18 months. I don't care too much about the 5 years projections. They're wrong, they're fake. What I care about is, do you understand what your next key milestone is? And do you have a clear path towards that? Are you going to build something? And in our case, even more importantly, being a corporate, is there a way that we can work together and I can help you? If not, you don't want my money. So you want it because I can provide you a channel or technical validation or market validation. So it goes back to what you were saying before. You need to listen and understand. And as a former entrepreneur, now very corporate, but a former entrepreneur, right? And we raised a bunch of money together.
Absolutely.
Right? So you tend to believe that you have like a right to be invested, right? Which doesn't make any sense to me, right? No, yeah, I'm an entrepreneur and you need to give me your money. Your pocket is full of my money. I don't understand that, right? It's mine. Well, give it to me. And this idea of the perseverance of the entrepreneur, it's wrong. Intelligence perseverance, right? Not all the time, but give me something I can work with. And in a corporate, giving me something I can work with is you understand what makes me make revenue. Eventually makes me get promoted, right? Please put yourself on the side. And I can tell you one thing. This code, the VC code, can be cracked. It can be cracked. If you do the homework, if you prepare well, if you understand how others do it, if you can do the perfect pitch, perfect intro, perfect simulation, that gets you funded. So there is a way to do that, but it's hard work. It's not something that you would just get like that, right?
Interesting.
So just kind of sort of trying to get sort of the 3 takeaways from sort of what you see sort of with those highly funded companies. One would be growth. The other one, I guess, would be retention or recurrence. The other one would be replicability somehow, no? Would you agree that those are things that entrepreneurs should, when they come to you, they should try to be pitching you on them and then obviously listen to you? No?
Well,
would you add any other sort of key factor that you're looking? I mean, apart from a distinctive vision, obviously, no?
I would add innovation.
Innovation.
You know, I think it's all about innovation and growth, and then I think the economics, all those other things are going to follow from that.
Perfect.
But you are looking, and going back to the point of now in places like LATAM, you're seeing businesses that are deep tech or SaaS, and these are businesses that are innovating for the market that they're in, and that is, of course, I think what captures our imagination.
I would add one, which is ability to hire or surround you by amazing people. I mean, these companies are going to make a dent or not if they find the 6 to 10 people at the beginning that are really changing something. Can you find them? Do you have them already? That's critical.
And I think that links to leadership.
Yeah.
Someone tells you I'm a leader, I always like the who's
Alone.
behind you, who's following you, no?
A lonely leader.
No, when you bring someone in your company and they don't bring anybody else along with them, that's kind of,
weird,
you're not really leading, no? So I think leadership is...
If I pick up what you said about innovation, if we look at the landscape in Southern Europe and LATAM, the countries we were discussing earlier, do you see any themes or any sort of sectors that are underrepresented or others that may be overrepresented? How are we doing in AI? How are we doing in health tech? I mean, in sectors that may not have been traditionally so strong for us.
Do you want to start with the seed part?
Yeah, so piggybacking to what I said before, I mean, I see too much fintech. I start to see the short variation of the same thing with a different angle.
Too much fintech entrepreneurs, too much fintech. Take note.
Particularly Brazil, Colombia, it's just like, everybody wants to bank the unbanked. Yeah, okay, yeah, what's going on in there, right? So too much fintech, too many wallets, too much whatever, and I see now starting this idea of much deeper entrepreneurs trying to do AI things, robotization, etc. And this one important piece that we don't talk too much about. The ability to pay for these sophisticated products is much less in LATAM than in US or Europe. So there is one advantage you're going to get there. If you're able to sell to your initial market at the price point they're going to pay you for, then you can scale this globally because you're going to be so much cheaper than anyone else, right?
Interesting point, yeah.
So we see a lot of fintech, and then we see companies that don't figure their business model, they become a fintech.
Okay.
No, it's like, I'm not going to
By
make money
default.
here, so I'm just going to become a fintech.
Nice.
We're doing a lot of prop tech in Spain. We're doing health. I think that's a new sector here in Spain. Agri-tech, we just did our first agri-tech investment. So we're kind of diversifying from marketplaces and
trend,
more B2C businesses because we're seeing better companies in B2B and deeper tech. In LATAM, a lot of fintech, but also more deep tech businesses than 3-4 years ago.
Yeah.
Yeah, I would agree with that. I think more B2B, and you still, I think the companies, there's still a lot of fintech, to your point, a lot of real estate, a lot of marketplaces, but increasingly more B2B, more SaaS, and that's still so underpenetrated. I know in Brazil for sure there's still entire areas that are pen and paper, right? And so there's just huge potential there.
That point, and you mentioned this B2B angle, that's very important for corporates. Like for us, it's much more easier sometimes to work with B2B startups because we can integrate them, show them to our customers. So we are very successful in integrating cybersecurity startups, which do something very niche, very useful, and we can bundle that into an offering for big corporates. So B2B is very relevant for big corporates doing investments.
Excellent. So now let's talk about exits. So where are exits? Where are they coming from? And here, Miguel, you actually have a double role. You're an investor, but you are in a big company that could potentially sort of serve as exits. No, I mean, how do you see it from your sort of dual standpoint as someone sort of investing sort of at the seed level, but also someone that certainly sort of you have the ear of Telefónica's board about sort of what's going on there, and then I would also love to have your views about exiting, about sort of returning the money to investors, which at the end of the day it's pretty difficult.
You need to do that, right? You need to
You
return
need
money
to
at
do
some
that. You
point,
need
yeah.
to do that, or to Telefónica's balance sheet.
Yeah, exactly. I have a triple role because as a former entrepreneur, I expect Carto to exit someone, right?
That's
So
right.
so
That's
big time.
right.
Yeah. So I would say, I mean, as a seed stage corporate investor, which is different, our main goal is driving business, and ROI it's a bit more secondary. I'm not saying that we don't need ROI, right? But so in our case, what we need to have is more not just final exits of the whole company, but a way to gain back liquidity so that we can invest back. Because we try to really move innovation at the seed stage. So we don't care so much about maximizing the return. We need to have enough return that we can then have the wheel turning. And for us, then we are open sometimes to exit in secondaries, at Series Bs or Cs, because we think we played our role. The company has been fostered, invested, they work with Telefónica. So we try to be accommodating there if the entrepreneurs want, and it's a good solution, to open liquidity, right? So I think that's the point from the investment perspective, right? It's a very accommodating partner in the cap table, I would say. On the acquisition side, that's a bit more tricky question. You're gonna get fired.
Your last no, don't worry.
Okay.
It's political, but
Yeah.
I was just remember that your last big acquisition was quite a long time ago. Actually, it doesn't even feature here. Okay, but it was big. It was big.
Yeah. So we found out, and we do quite a bunch of small acquisitions year over year. We do them, and that works pretty well. It's acqui-hires, I would say, right? Integrating small teams of startups in cybersecurity, in networks, into the team works very, very well. That integration works. When we integrate a mid-sized company, it's very difficult. They need to be big enough to become a complete business unit. Okay. If not, the big elephant sometimes has its own dynamics, right? So I would say we are waiting on that a bit. We do smaller acquisitions, but and we don't do mid-sized acquisition. But well, we're always open to look at potential deals.
So then, no big headlines in the coming years about billion-dollar acquisitions from Telefónica.
I don't think so, but now I'm getting fired.
No, don't go on that way. So what's your take on sort of exiting? I mean, who would be sort of the buyers for that? How do you see sort of that going on?
So before starting the fund, I was an LP for 6 years.
Yeah.
So I used to tell funds, hey, you're asking me for money and you didn't even return the fund. Now I'm like, yeah, but you know, I'll return it. We'll return it at some point. You can give me, you can give us money for our next fund. Investing is easy. Investing well is difficult. Exiting is very hard, especially in Spain and Latin America. The options are limited. We've had 3 exits so far, 2 very good ones, 1 bad one where we didn't get our money back. And then we do secondary transactions so that we can just give liquidity to the investors. So it's a balance of, trying to have decent exits that you can get a good multiple, and then getting secondary to increase your DPI, your distributions to paid-in capital, which is a key number that obviously investors look at, because you have to return the money and it has to be cash on cash, not just on paper, right?
Do you think that the fact that we don't have obvious buyers in those regions, I mean, sort of, it's a bit of it's making it difficult to actually increase the M&As? I mean, the sense that there are not sort of the Googles of this world in the region that can sort of look at the companies and go and buy them?
Certainly, of course. I mean, it's difficult because it's a more limited scope of buyers, and then it makes it difficult for the founders and the funds that back the founders, because we're on the road all the time, meeting all these big tech companies in the US, in China, and all this traveling is sometimes geared towards that relationship when you want to sell 5-6 years from now. So it's a lot of work.
Yep.
It's much more difficult to sell a company if you're in Spain than if you're in London. And it's better to be bought than to sell your company. So they have to fly to Madrid and come and meet you, which is not obvious for them if they're in San Francisco or in Tokyo. So obviously it makes things harder. The corporates in Spain haven't really bought anything in the last few years. Telefónica, I think, is a reference because at least you have a lot of innovation. You have Wida, you have all these different things, but we don't have that that option. That's just the way it is.
Yeah, I think if you look at the universe of the big buyers, they tend to be, from the US, or they tend to be from Asia, and because of that, there's a level of foreignness in going into markets that are unknown, right? Mm-hmm. It is a little bit of like, if this M&A goes sideways, I lose my job, right? Whereas if I do M&A in the US or in the UK, same language, there's a level of familiarity with that. And I think in a place like LATAM, you add on, political instability, macro risk, FX risk, and that makes it very nerve-wracking for people to play in that market. So I think as investors, and I think all of us here are, you have to be really long-term players in these markets. You have to really hunker down and commit to live through the cycles.
Exactly.
Because oftentimes it's got nothing to do with the company, right? But you might have to ride one of those waves.
So when just finally for closing, I mean, to the entrepreneurs here, some of them that are looking at, potentially looking at an exit, any specific recommendations that you would have for them at when to exit, or at sort of how to exit, just so that we can sort of increase the M&A pool? Any thoughts that you would have for the people here that maybe some of them thinking about an exit at some point in time in the future?
One short advice, but I think it's critical. Have the big corporates be your customers. So be a big provider to a big customer, a big corporate, and they will buy you.
Okay.
I think building the relationships from day one. It's much better to be acquired than to sell your company, right? So if you build the relationships from day one, they can follow your progress. You meet every now and then. They see what you're doing, and then at some point, it's what happened with Tiquetea, for example, with Evan Bright. It's what happened with Celandalantar, and then at some point, when they want to buy, you're there. They know you. They trust you. They see your progress. So I think I would build that from day one. Those relationships.
Excellent.
I mean, what I would say, and entrepreneurs think about this differently, but build a company that you want to last 100 years. Don't think about an exit, right? If you build an amazing company, there will be liquidity. And so maybe, I think that would be my advice.
Excellent. Okay, guys, I think that we have had a great panel. Please, a big round of applause for our panelists.